The European Central Bank is the central bank for the euro and administers monetary policy of the Eurozone, which consists of 19 EU member states and is one of the largest currency areas in the world. It is one of the world's most important central banks and is one of the 7 institutions of the European Union listed in the Treaty on European Union. The capital stock of the bank is owned by the central banks of all 28 EU member states. The Treaty of Amsterdam established the bank in 1998, and it is headquartered in Frankfurt, Germany. As of 2015, the president of the ECB is Mario Draghi, former governor of the Bank of Italy, former member of the World Bank, and former managing director of the Goldman Sachs International Division. The bank primarily occupied the Euro Tower prior to and during the construction of the new headquarters. The primary objective of the ECB, mandated in Article 2 of the Statute of the ECB, is to maintain price stability within the Eurozone. Its basic tasks, set out in Article 3 of the statute, are to set and implement the monetary policy for the Eurozone, to conduct foreign exchange operations, to take care of the foreign reserves of the European system of central banks and operation of the financial market infrastructure under the TARGET2 payments system and the technical platform for settlement of securities in Europe. The ECB has, under Article 16 of its statute, the exclusive right to authorize the issuance of euro banknotes. Member states can issue euro coins, but the amount must be authorized by the ECB beforehand. The ECB is governed by European law directly, but its setup resembles that of a corporation in the sense that the ECB has shareholders and stock capital. Its capital is 11 billion euros held by the national central banks of the member states as shareholders. The initial capital allocation key was determined in 1998 on the basis of the states' population and GDP, but the capital key has been adjusted. Shares in the ECB are not transferable and cannot be used as collateral. History. The European Central Bank is the de facto successor of the European Monetary Institute. The EMI was established at the start of the second stage of the EU's economic and monetary union to handle the transitional issues of states adopting the euro and prepare for the creation of the ECB and European system of central banks. The EMI itself took over from the earlier European Monetary Cooperation Fund. The ECB formally replaced the EMI on 1 June 1998 by virtue of the Treaty on European Union. However, it did not exercise its full powers until the introduction of the euro on 1 January 1999, signaling the third stage of EMU. The bank was the final institution needed for EMU, as outlined by the EMU reports of Pierre Werner and President Jacques Delors. It was established on 1 June 1998. The first president of the bank was Wim Duisenberg, the former president of the Dutch Central Bank and the European Monetary Institute. While Duisenberg had been the head of the EMI just before the ECB came into existence, the French government wanted Jean-Claude Trichet, former head of the French Central Bank, to be the ECB's first president. The French argued that since the ECB was to be located in Germany, its president should be French. This was opposed by the German, Dutch and Belgian governments, who saw Duisenberg as a guarantor of a strong euro. Tensions were abated by a gentleman's agreement in which Duisenberg would stand down before the end of his mandate, to be replaced by Trichet. Trichet replaced Duisenberg as president in November 2003. There had also been tension over the ECB's executive board. with the United Kingdom demanding a seat even though it had not joined the single currency. Under pressure from France, 3 seats were assigned to the largest members, France, Germany, and Italy. Spain also demanded and obtained a seat. Despite such a system of appointment, the board asserted its independence early on in resisting calls for interest rates and future candidates to it. When the ECB was created, it covered a Eurozone of 11 members. Since then, Greece joined in January 2001, Slovenia in January 2007, Cyprus and Malta in January 2008, Slovakia in January 2009, Estonia in January 2011, Latvia in January 2014, and Lithuania in January 2015, enlarging the bank's scope and the membership of its governing council. On the 1st of December 2009, the Treaty of Lisbon entered into force. ECB, according to the Article 13 of TEU, gained official status of an EU institution. In September 2011, when German appointee to the Governing Council and Executive Board, Jürgen Stark, resigned in protest of the ECB's bond-buying program. Financial Times Deutschland called it the end of the ECB as we know it, referring to its perceived hawkish stance on inflation and its historical Bundesbank influence. On the 1st of November 2011, Mario Draghi replaced Jean-Claude Trichet as president of the ECB. In April 2011, the ECB raised interest rates for the first time since 2008 from 1% to 1.25%, with a further increase to 1.50% in July 2011. However, in 2012-2013, the ECB sharply lowered interest rates to encourage economic growth, reaching the historically low 0.25% in November 2013. Soon after, the rates were cut to 0.15%. Then on the 4th of September 2014, the central bank reduced the rates by 2/3 from 0.15% to 0.05%, the lowest rates on record. In November 2014, the bank moved into its new premises. Powers and objectives. Objective: the primary objective of the European Central Bank, set out in Article 127 of the Treaty on the Functioning of the European Union, is to maintain price stability within the Eurozone. The Governing Council in October 1998 defined price stability as inflation of under 2%, a year-on-year increase in the harmonized index of consumer prices for the euro area of below 2%, and added that price stability was to be maintained over the medium term. Unlike, for example, the United States Federal Reserve Bank, the ECB has only one primary objective, but this objective has never been defined in statutory law, and the HICP target can be termed ad hoc. The Governing Council confirmed this definition in May 2003 following a thorough evaluation of the ECB's monetary policy strategy. On that occasion, the Governing Council clarified that, in the pursuit of price stability, it aims to maintain inflation rates below, but close to, 2% over the medium term. All lending to credit institutions must be collateralized as required by Article 18 of the Statute of the ESCB. The Governing Council clarification has little force in law, without prejudice to the objective of price stability. The treaty also states that the ESCB shall support their general economic policies in the Union with a view to contributing to the achievement of the objectives of the Union. Basic basic tasks. The basic tasks of the ECB are to define and implement the monetary policy for the Eurozone, to conduct foreign exchange operations, to take care of the foreign reserves of the European system of central banks, and to promote smooth operation of the financial market infrastructure, under the TARGET2 payments system and being currently developed technical platform for settlement of securities in Europe. Further tasks, among others, include the exclusive right to authorize the issuance of euro banknotes. Member states can issue euro coins, but the amount must be authorized by the ECB beforehand. The ECB shall also collect statistical information to fulfill the tasks of the European system of central banks, and contribute to financial stability and supervision. Considerations on ECB's monetary policy in U.S.-style central banking. The Federal Reserve System purchases Treasury securities in order to inject liquidity into the economy. The Eurosystem, on the other hand, uses a different method. There are about 1,500 eligible banks which may bid for short-term repo contracts of 2 weeks to 3 months duration. The banks in effect borrow cash and must pay it back. The short durations allow interest rates to be adjusted continually. When the repo notes come due, the participating banks bid again. An increase in the quantity of notes offered at auction allows an increase in liquidity in the economy. A decrease has the contrary effect. The contracts are carried on the asset side of the European Central Bank's balance sheet, and the resulting deposits in member banks are carried as a liability. In layman terms, the liability of the central bank is money, and an increase in deposits in member banks, carried as a liability by the central bank, means that more money has been put into the economy. To qualify for participation in the auctions, banks must be able to offer proof of appropriate collateral in the form of loans to other entities. These can be the public debt of member states, but a fairly wide range of private banking securities are also accepted. The fairly stringent membership requirements for the European Union, especially with regard to sovereign debt as a percentage of each member state's gross domestic product, are designed to ensure that assets offered to the bank as collateral are, at least in theory, all equally good, and all equally protected from the risk of inflation. Organization. The ECB has 4 decision-making bodies that take all the decisions with the objective of fulfilling the ECB's mandate: the Executive Board, the Governing Council, the General Council, and the Supervisory Board. Decision-making bodies of the ECB. The Executive Board. The Executive Board is responsible for the implementation of monetary policy and the day-to-day running of the bank. It can issue decisions to national central banks and may also exercise powers delegated to it by the Governing Council. It is composed of the President of the bank, the Vice President, and 4 other members. They are all appointed for non-renewable terms of 8 years. They are appointed from among persons of recognized standing and professional experience in monetary or banking matters by common accord of the governments of the member states at the level of heads of state government, on a recommendation from the Council, after it has consulted the European Parliament and the Governing Council of the ECB. The Executive Board normally meets every Tuesday. José Manuel González Páramo, a Spanish member of the Executive Board since June 2004, was due to leave the board in early June 2012, and no replacement had been named as of late May 2012. The Spanish had nominated Barcelona-born Antonio Sáenz de Vicuna, an ECB veteran who heads its legal department, as González Páramo's replacement as early as January 2012, but alternatives from Luxembourg, Finland, and Slovenia were put forward and no decision made by May. After a long political battle, Luxembourg's Yves Mersch was appointed as González Páramo's replacement. The Governing Council. The Governing Council is the main decision-making body of the Eurosystem. It comprises the members of the Executive Board and the governors of the national central banks of the euro area countries. Since January 2015, Council minutes of the Council are published on Internet. Before 2015, the fact that the Council's minutes were not published had raised controversy in some financial circles. The General Council. The General Council is a body dealing with transitional issues of euro adoption, for example, fixing the exchange rates of currencies being replaced by the euro. It will continue to exist until all EU member states adopt the euro, at which point it will be dissolved. It is composed of the President and Vice President together with the governors of all of the EU's national central banks. The Supervisory Board. The Supervisory Board meets twice a month to discuss, plan and carry out the ECB's supervisory tasks. It proposes draft decisions to the Governing Council under the non-objection procedure. It is composed of Chair, Vice-Chair for ECB representatives and representatives of national supervisors. If the national supervisory authority designated by a member state is not a national central bank, the representative of the competent authority can be accompanied by a representative from their NCB. In such cases, the representatives are together considered as one member for the purposes of the voting procedure. It also includes the Steering Committee, which supports the activities of the Supervisory Board and prepares the Board's meetings. It is composed by the Chair of the Supervisory Board, Vice-Chair of the Supervisory Board, one ECB representative and 5 representatives of national supervisors. The 5 representatives of national supervisors are appointed by the Supervisory Board for 1 year based on a rotation system that ensures a fair representation of countries. Current composition: Chair, Daniele Noe; Vice-Chair, Sabine Lautenschläger; ECB Representative, Ignazio Angeloni; ECB Representative, Luca N. ECB Representative, Julia Dixon; ECB Representative, Sirka Hämäläinen. Capital subscription. The ECB is governed by European law directly, but its setup resembles that of a corporation in the sense that the ECB has shareholders and stock capital. Its initial capital was supposed to be €5 billion, and the initial capital allocation key was determined in 1998 on the basis of the member states' populations and GDP, but the key is adjustable. The euro area NCBs were required to pay the respective subscriptions to the ECB's capital in full. The NCBs of the non-participating countries have had to pay 7% of the respective subscriptions to the ECB's capital as a contribution to the operational costs of the ECB. As a result, the ECB was endowed with an initial capital of just under €4 billion. The capital is held by the national central banks of the member states as shareholders. Shares in the ECB are not transferable and cannot be used as collateral. The NCBs are the sole subscribers to and holders of the capital of the ECB. Today, ECB capital is about €11 billion, which is held by the national central banks of the member states as shareholders. The NCB's shares in this capital are calculated using a capital key which reflects the respective members' share in the total population and gross domestic product of the EU. The ECB adjusts the shares every 5 years and whenever a new country joins the EU. The adjustment is made on the basis of data provided by the European Commission. All national central banks that own a share of the ECB capital stock as of the 1st of January 2015 are listed below. Non-euro area NCBs are required to pay up only a very small percentage of the subscribed capital, which accounts for the different magnitudes of euro area and non-euro area total paid-up capital reserves. In addition to capital subscriptions, the NCBs of the member states participating in the euro area provided the ECB with foreign reserve assets equivalent to around 40 billion euros. The contributions of each NCB is in proportion to its share in the ECB's subscribed capital, while in return each NCB is credited by the ECB with a claim in euro equivalent to its contribution. 15% of the contributions was made in gold and the remaining 85% in US dollars and Japanese yen. Languages: the internal working language of the ECB is generally English, and press conferences are usually held in English. External communications are handled flexibly. English is preferred for communication within the ESCB and with financial markets. Communication with other national bodies and with EU citizens is normally in the respective language, but the ECB website is predominantly English. Official documents such as the annual report are in the official languages of the EU. Independence. Generally, the Eurosystem is functionally or operationally independent. When performing Eurosystem-related tasks, neither the ECB, nor an NCB, nor any member of the decision-making bodies may seek or take instructions from any external body. The community institutions and bodies and the governments of the member states may not seek to influence the members of the decision-making bodies, of the ECB or of the NCBs in the performance of the tasks. Security of tenure. Governors of national central banks have a minimum renewable term of office of 5 years. Members of the executive board of the ECB have a minimum non-renewable term of office of 8 years. Removals from office are only possible in the event of incapacity or serious misconduct, and in this respect the Court of Justice of the European Communities is competent to settle any dispute. Political independence. The independence of the ECB is instrumental in maintaining price stability. Not only must the bank not seek influence, but EU institutions and national governments are bound by the treaties to respect the ECB's independence. To offer some accountability, the ECB is bound to publish reports on its activities and has to address its annual report to the European Parliament, the European Commission, the Council of the European Union and the European Council. The European Parliament also gets to question and then issue its opinion on candidates to the Executive Board. The governors of national central banks represented in the Governing Council of the ECB are appointed by the national executives, and can be reappointed, in spite of the fact that voting inside the ECB is secret. There is some evidence pointing in the direction of Governing Council members voting along national lines. Financial independence. The ECB's financial independence means that the ECB has its own budget. Its capital is subscribed and paid up by the euro area central banks.